Question 1. What is the primary role of underwriting in the insurance process? A. To assess the potential profit from an insurance policy based on the premium income. B. To evaluate and select risks that align with the insurer's criteria and guidelines. C. To determine the legal implications of an insurance contract before issuance. D. To monitor the performance of the insurance policy post-issuance. Answer: B. To evaluate and select risks that align with the insurer's criteria and guidelines. Explanation: Underwriting is fundamentally the process through which insurance companies evaluate the risks of insuring a potential client. This involves assessing the applicant's personal, financial, and risk-related details to ensure that the insurer accepts risks that align with their risk tolerance and guidelines. Option B correctly represents the primary function of underwriting, which is risk evaluation and selection. Option refers to profitability, which is indirectly considered but not the core of underwriting. Option C is more related to contract law and pre-issuance legalities, not the underwriting process itself. Option D pertains to post-issuance activities, which are not part of underwriting but rather claims handling or policy management. Relevant law guideline. Vermont state regulations and NAIC guidelines emphasize that underwriting must align with both state-specific insurance laws and broader industry standards for risk management. Question 2. Mr. Taylor, an insurance underwriter, is assessing an application for property insurance from a new client, Mr. Baker, who owns a historic building that is prone to frequent flooding. Mr. Taylor must decide whether to issue the policy with standard coverage or add an exclusion for flood damage. What should Mr. Taylor do based on standard underwriting practices? A. Issue the policy with standard coverage, as it is legally required to cover all risks. B. Issue the policy with standard coverage and include an endorsement for flood coverage at an additional premium. C. Issue the policy with an exclusion for flood coverage due to the known risk and document the decision. D. Reject the application entirely due to the high risk associated with flooding. Answer: C. Issue the policy with an exclusion for flood coverage due to the known risk and document the decision. Explanation: Under standard underwriting practices, insurers are expected to assess known risks such as flooding, especially when the property is in a high-risk flood zone. In this case, Mr. Taylor should exclude flood coverage, as this is a known and significant risk. The exclusion must be clearly outlined in the policy and proper documentation necessary to demonstrate that the decision was based on an acceptable risk assessment process. Option is incorrect because underwriters are not legally required to cover all risks. Certain risks like floods can be excluded or require special conditions. Option B may be an option if the insurer has a specific program for offering flood coverage, but that would require the client to pay additional premiums. However, the question implies Mr. Taylor's decision without discussing the availability of such an endorsement. Option D is overly restrictive and not typically required unless the property is uninsurable under standard guidelines, which is not mentioned in this case. Relevant law guideline. The National Flood Insurance Act allows insurers to exclude certain high-risk natural disaster exposures. In Vermont, the Department of Financial Regulation (DFR) outlines best practices for flood exclusions in residential property underwriting. Question 3. Which of the following is the best method for assessing the insurability of an applicant for life insurance? A. Only assessing the applicant's occupation and the associated risks. B. Evaluating the applicant's complete medical history and current lifestyle choices, including family medical history. C. Relying exclusively on the applicant's credit score to assess financial risk. D. Evaluating the applicant's insurance claims history with previous insurers. Correct answer: B. Evaluating the applicant's complete medical history and current lifestyle choices, including family medical history. Explanation: In life insurance underwriting, the most important factors are the applicant's medical history, lifestyle, including habits such as smoking or alcohol consumption, and family medical history. This allows the underwriter to assess the mortality risk associated with insuring that individual. Option is incorrect because occupation is only one factor and not sufficient on its own to assess life insurance risk. Option C is not comprehensive enough as credit score pertains to financial risk and does not address health or mortality factors. Option D is related more to claims history, which can be useful in property or casualty insurance but does not directly impact life insurance underwriting unless the claims are related to health conditions. Relevant law guideline. NAIC guidelines and Vermont insurance regulations require thorough medical evaluation in life insurance underwriting. This includes both the applicant's current medical status and genetic predispositions as it affects underwriting decisions regarding premium rates and coverage terms. Question 4. Which of the following is most important when assessing a property insurance application for a residential property in Vermont? A. The applicant's previous claim history for property damage. B. The location of the property and its proximity to natural disaster zones, such as floodplains. C. The applicant's current credit score. D. The applicant's household size and number of dependents. Answer: B. The location of the property and its proximity to natural disaster zones, such as floodplains. Explanation: in property insurance underwriting, one of the key factors is the location of the property and its exposure to natural disasters such as floods, earthquakes, or wildfires. This helps determine the level of risk associated with insuring the property. Option is important but not as critical as location when it comes to property insurance. A past claim history can influence underwriting decisions, but location is often a more significant factor. Option C might impact underwriting in general, but it is not as relevant to property insurance where geographical factors are a higher priority. Option D focuses on personal factors that are not typically as influential for property insurance underwriting decisions compared to the physical location of the property. Relevant law guideline. Vermont law and the NAIC guidelines emphasize the importance of evaluating environmental factors, including proximity to floodplains, in property insurance underwriting. Question 5. In health insurance underwriting, which of the following is typically considered when determining an applicant's risk? A. The applicant's annual income and employment status. B. The applicant's occupation and work environment risks. C. The applicant's medical history, including pre-existing conditions and current health status. D. The applicant's age and number of dependents. Answer: C. The applicant's medical history, including pre-existing conditions and current health status. Explanation: health insurance underwriting places the most importance on an applicant's medical history and current health status. This includes assessing any pre-existing conditions, prescription drug use, and other factors that could impact the individual's health and longevity. Option is more relevant for other types of insurance, e.g., life insurance, but not the most critical factor for health underwriting. Option B could be factor in certain health insurance types related to occupational health risks but is less influential than medical history. Option D is important for life insurance but less so for health insurance underwriting. Relevant law guideline. According to NAIC regulations and Vermont insurance law, insurers must consider health history when underwriting health insurance, as this helps predict the likelihood of future claims and associated costs. Question 6. An applicant, MS Carson, is applying for a homeowner's insurance policy for property located in an area with high wildfire risk. What should the underwriter do to assess the risk? A. Issue the policy without adjustments because the property is in good condition. B. Deny the application based solely on the location's wildfire risk. C. Issue the policy with exclusions for wildfire-related damage and require additional fire safety measures. D. Increase the premium but issue the policy with standard coverage. Answer: C. Issue the policy with exclusions for wildfire-related damage and require additional fire safety measures. Explanation: in areas with high wildfire risk, underwriters may choose to issue a policy with specific exclusions for wildfire-related damage, as it is a known high-risk factor. Additionally, they may require the applicant to take fire safety measures to mitigate the risk, such as fireproofing the home or creating defensible space. Option is not a safe practice because wildfire risk needs to be considered. Option B is an extreme approach and not typically necessary unless the property is uninsurable due to severe risks. Option D would only apply if the insurer had a specific risk mitigation program, but increasing premiums without addressing exclusions or safety measures may leave the insurer exposed. Relevant law guideline. The NAIC and Vermont regulations provide that insurers should manage high-risk exposures like wildfires through exclusions or risk mitigation measures rather than blanket denials or unadjusted premiums. Question 7. Which of the following is the best example of an underwriting adjustment in property insurance? A. Increasing the deductible to reduce the policy premium. B. Issuing a policy without considering previous claims history. C. Offering a standard policy without exclusions for specific risks. D. Changing the coverage limits to increase the insurer's exposure. Answer A. Increasing the deductible to reduce the policy premium. Explanation. Underwriting adjustments often involve modifying the terms of the policy to balance risk and premium. Increasing the deductible reduces the insurer's potential payout in the event of claim, thus allowing for reduction in the policy premium. Option B is not an adjustment, it's an oversight. Previous claims history should be considered in property insurance underwriting. Option C is not typical underwriting adjustment, as exclusions are a common method to manage risk in high-risk areas. Option D would increase the insurer's risk exposure and is not typically desirable underwriting adjustment. Relevant law guideline. Vermont and NAIC regulations highlight that underwriting adjustments should aim to balance risk and premium, including deductible adjustments and exclusions. Question 8. Mr. Grant is applying for auto insurance and discloses that he has been convicted of 2 Dewey offenses in the past 3 years. What should the underwriter consider when deciding whether to issue the policy? A. The time elapsed since the offenses and whether Mr. Grant has completed any rehabilitation programs. B. Whether Mr. Grant's credit score meets the insurer's threshold for standard coverage. C. The number of miles Mr. Grant drives annually and the number of vehicles he owns. D. The make and model of Mr. Grant's car, as more expensive cars are more likely to be involved in accidents. Answer A. The time elapsed since the offences and whether Mr. Grant has completed any rehabilitation programs. Explanation. In underwriting auto insurance, a history of Dewey offences is a significant factor. The underwriter would typically assess the applicant's risk by considering the time that has passed since the offences and whether the applicant has completed any rehabilitation or corrective programs which may demonstrate reduced risk. Option B is not directly related to Dewey offences. Although credit score can affect underwriting in general, it is not the primary consideration here. Option C is relevant to general risk assessment but does not specifically address the risks associated with Deweys. Option D focuses on car-related risk but does not address Mr. Grant's driving history or behavior. Relevant law guideline. Vermont insurance regulations require that underwriters consider high-risk driving behaviors such as Dewey's and assess whether corrective actions have been taken before making underwriting decisions. Question 9. Which of the following is an example of a risk classification in health insurance underwriting? A. Exclusion for pre-existing conditions in the policy terms. B. Categorizing applicants based on their age, gender, and health conditions. C. Offering a higher premium based on the applicant's income level. D. Denying coverage for applicants who have a history of smoking. Answer. B. Categorizing applicants based on their age, gender, and health conditions. Explanation. Risk classification in health insurance involves grouping applicants based on specific characteristics such as age, gender, and health conditions. These factors help underwriters assess the overall risk that each applicant represents and adjust premiums accordingly. Option is a common practice but not the core of risk classification. Exclusions are part of managing specific risks. Option C is not typical, as income level does not directly correlate with health insurance underwriting risk. Option D may occur but is not considered a standard risk classification. A history of smoking might influence underwriting, but is typically evaluated as health factor rather than an automatic denial. Relevant law guideline. Under Vermont insurance laws and NAIC guidelines, health insurance underwriting includes risk classification based on health and demographic factors which impacts both eligibility and premiums. Question 10. Which type of insurance policy typically includes loss of use coverage? A. Auto insurance. B. Homeowners insurance. C. Health insurance. D. Life insurance. Answer. B. Homeowners insurance. Explanation. Loss of use coverage is part of homeowners insurance that provides reimbursement for living expenses if the home is uninhabitable due to covered peril. This ensures that the insured can maintain their standard of living while repairs are being made. Question 11. In Vermont, how long does an insurance company have to investigate and resolve a claim after it is filed? A. 10 days. B. 30 days. C. 45 days. D. 60 days. Answer. B. 30 days. Explanation. Under Vermont law, insurers are generally required to investigate and resolve claims within 30 days unless extenuating circumstances require additional time. Question 12. What is a key purpose of subrogation in insurance? A. To allow policyholders to assign their policies to others. B. To enable insurers to recover costs from a third party responsible for a loss. C. To provide additional coverage for high-risk items. D. To ensure that premiums are kept at a fixed rate. Answer. B. To enable insurers to recover costs from a third party responsible for a loss. Explanation: subrogation allows an insurer to seek reimbursement from a third party who is legally responsible for a policyholder's loss, thus reducing the insurer's financial burden. Question 13. Which of the following is not a common peril covered under a standard homeowner's insurance policy? A. Fire. B. Theft. C. Flood. D. Windstorm. Answer: C. Flood. Explanation: flood damage is typically excluded from standard homeowners insurance policies and requires separate flood insurance policy. Question 14. What is the primary function of an insurance adjuster? A. To sell insurance policies to customers. B. To determine the amount of a claim that the insurer is liable for. C. To underwrite new policies for high-risk clients. D. To review the financial performance of the insurance company. Answer: B. To determine the amount of a claim that the insurer is liable for. Explanation: an insurance adjuster evaluates claims by investigating the circumstances of a loss and determining the appropriate payout based on policy terms. Question 15. Which part of an insurance policy contains the specific details of coverage, including limits and deductibles? A. Declarations page. B. Insuring agreement. C. Exclusions section. D. Conditions section. Answer: A. Declarations page. Explanation: the declarations page provides an overview of the policy, including the insured's name, the coverage period, policy limits, and deductibles. Question 16. In liability insurance, what does the duty to defend clause obligate the insurer to do? A. Pay the legal fees of the insured in any lawsuit. B. Provide a defense only if the insured is found liable. C. Defend the insured against claims covered by the policy. D. Pay any fines or penalties imposed on the insured. Answer: C. Defend the insured against claims covered by the policy. Explanation: the duty to defend obligates the insurer to provide legal defense for the insured when claims fall within the policy's coverage, even if the claims are groundless. Question 17. What is the primary purpose of reinsurance? A. To increase premiums for policyholders. B. To transfer risk from one insurer to another. C. To ensure that policyholders receive faster claim payouts. D. To regulate the insurance industry more effectively. Answer: B. To transfer risk from one insurer to another. Explanation: reinsurance allows insurers to spread out the risk of large claims by transferring part of their liabilities to other insurance companies. Question 18. Which of the following is an example of a moral hazard in insurance? A. A homeowner failing to install smoke detectors. B. A driver parking their car in a high-crime area. C. An insured individual exaggerating a claim to receive more money. D. A business located in a flood zone without flood insurance. Answer: C. An insured individual exaggerating a claim to receive more money. Explanation: moral hazard refers to behaviors that increase the likelihood of a loss because the insured knows they have coverage. Question 19. What is the main difference between occurrence and claims-made liability policies? A. The coverage limits available under each policy type. B. The timing of when the loss occurs versus when the claim is filed. C. The types of risks covered by each policy. D. The deductible amounts associated with each policy. Answer: B. The timing of when the loss occurs versus when the claim is filed. Explanation: occurrence policy covers losses that occur during the policy period, regardless of when the claim is filed, while a claims-made policy only covers claims made during the policy period. Question 20. What is the primary purpose of a coinsurance clause in a property insurance policy? A. To reduce the insurer's liability for large claims. B. To encourage policyholders to carry adequate insurance coverage. C. To provide additional coverage for high-value items. D. To allow policyholders to share their coverage with others. Answer: B. To encourage policyholders to carry adequate insurance coverage. Explanation: the coinsurance clause requires policyholders to insure their property to a certain percentage of its value, ensuring they carry adequate coverage. Question 21. Under Vermont law, which of the following factors is generally not allowed to be used in underwriting decisions for personal auto insurance? A. The applicant's credit score. B. The applicant's gender. C. The applicant's driving history. D. The applicant's age. Answer: B. The applicant's gender. Explanation. In Vermont, using gender as factor in underwriting personal auto insurance policies is considered discriminatory under state law. However, credit scores, driving history, and age are permissible risk factors used to assess risk and determine premiums, provided they comply with anti-discrimination laws. Vermont emphasizes fairness and equity in underwriting practices as outlined by the Vermont Department of Financial Regulation (DR). Question 22. Which of the following best describes the concept of underwriting profit in insurance? A. The difference between premiums collected and claims paid before operating expenses are deducted. B. The amount of premium collected after operating expenses and claims are paid. C. The amount of money an insurer makes from its investment portfolio. D. The total premiums collected during the underwriting year. Answer A. The difference between premiums collected and claims paid before operating expenses are deducted. Explanation. Underwriting profit refers to the difference between the premiums collected and the claims paid out by the insurer. This calculation is done before deducting operating expenses, e.g., administrative costs. If premiums exceed claims, the insurer generates an underwriting profit, which is essential for financial stability. If claims exceed premiums, the insurer incurs an underwriting loss, which may necessitate a rate adjustment or other strategic changes. Question 23. Scenario question. Sarah owns a small bakery in Vermont and is purchasing a commercial property insurance policy. During the underwriting process, the insurer notices that the bakery is located in a high-risk flood zone. What action should the underwriter take in this situation? A. Decline the policy outright due to the flood risk. B. Issue the policy but exclude flood coverage. C. Require Sarah to purchase a separate flood insurance policy through the NFIP. D. Offer a reduced premium to encourage policy purchase. Answer. C. Require Sarah to purchase a separate flood insurance policy through the NFIP. Explanation. Standard commercial property insurance policies typically exclude flood coverage. In this case, the underwriter should advise Sarah to obtain a separate flood insurance policy through the National Flood Insurance Program (NFIP). Declining the policy outright, option A, would be inappropriate if other risks are acceptable. Reducing the premium, option D, would increase insurers' exposure without proper risk management. Question 24. In life insurance underwriting, which of the following would likely place an applicant in a substandard risk category? A. No family history of chronic diseases. B. Non-smoker for more than 10 years. C. High cholesterol levels and obesity. D. Regular exercise and balanced diet. Answer. C. High cholesterol levels and obesity. Explanation. A substandard risk category applies to individuals with higher than average risk due to health conditions such as high cholesterol and obesity. These factors increase the likelihood of claims, making the applicant more expensive to insure. Question 25. Which of the following best describes facultative reinsurance? A. A reinsurance agreement that covers an entire portfolio of policies. B. A policy-specific reinsurance agreement. C. An automatic reinsurance arrangement for all policies. D. A type of reinsurance required by law. Answer. B. A policy-specific reinsurance agreement. Explanation. Facultative reinsurance is a policy-specific arrangement where the reinsurer evaluates individual policies before agreeing to provide coverage. In contrast, treaty reinsurance, option A, covers an entire portfolio of policies under a blanket agreement. Question 26. Which of the following is the best example of an adverse selection scenario? A. A person with a clean driving record purchasing auto insurance. B. A healthy individual buying life insurance. C. A homeowner in a flood-prone area purchasing property insurance. D. An employer offering group health insurance to employees. Answer. C. A homeowner in a flood-prone area purchasing property insurance. Explanation. Adverse selection occurs when individuals with a higher than average risk are more likely to purchase insurance. In this case, the homeowner in a flood-prone area is more likely to purchase property insurance, potentially leading to higher claims costs for the insurer. Question 27. Which of the following is considered a qualitative risk assessment method in underwriting? A. Reviewing actuarial tables. B. Analyzing financial statements. C. Conducting a property inspection. D. Calculating the combined ratio. Answer. C. Conducting a property inspection. Explanation. Qualitative risk assessment involves non-numerical evaluations, such as conducting property inspections or reviewing an applicant's lifestyle and occupation. In contrast, quantitative methods options A, B, and D involve numerical data and formulas. Question 28. In Vermont, which regulatory body oversees insurance practices, including underwriting? A. National Association of Insurance Commissioners, NAIC. B. Vermont Department of Labor. C. Vermont Department of Financial Regulation, DFR. D. Federal Insurance Office, FIO. Answer: C. Vermont Department of Financial Regulation, DFR. Explanation: the Vermont Department of Financial Regulation, DFR, is the state agency responsible for regulating insurance companies, protecting consumers, and ensuring fair and ethical underwriting practices. Question 29. Which of the following underwriting actions would be considered a violation of anti-discrimination laws? A. Charging higher premiums based on driving history. B. Refusing coverage due to a pre-existing medical condition. C. Adjusting premiums based on geographic location. D. Charging different rates based on race or ethnicity. Answer: D. Charging different rates based on race or ethnicity. Explanation: it is illegal under anti-discrimination laws to charge different rates or refuse coverage based on race, ethnicity, gender, or religion. Insurers must use fair and objective criteria in underwriting decisions. Question 30. What is the primary purpose of coinsurance clauses in property insurance policies? A. To encourage the policyholder to share the risk with the insurer. B. To limit the insurer's liability for small claims. C. To incentivize the policyholder to insure property to its full value. D. To provide additional coverage for high-value items. Answer: C. To incentivize the policyholder to insure property to its full value. Explanation: coinsurance clauses require policyholders to insure their property to a specified percentage of its value, e.g., 80%, ensuring they carry adequate coverage. If the property is underinsured, the policyholder may face reduced claim payments.